7-Eleven Malaysia Holdings wholly owned subsidiary Convenience Shopping Sabah will now sell its 75% stake in Caring Pharmacy Group to Big Pharmacy Holdings at a higher price tag of 675 million ringgit. This cash consideration is a premium of 37.5 million from its initial value of 637.5 million announced on July 21st. CSS has signed a sale and purchase agreement with Big Pharmacy for the cash deposit, which follows a binding term sheet that CSS received from Big Pharmacy subsidiary back in June. The new price tag represents an implied PE multiple of 20.7 times vis-a-vis the PE multiple of pharmacy retailers listed in Asia, as opposed to the 19.6 times PE multiple incorporated in Caring's 100% equity value of 850 million ringgit. Big Pharmacy is also acquiring the remaining 25% in Caring from Motivasi Optima, which means Caring will be a wholly owned unit of the other pharmacy upon completion of the proposals. For 7-Eleven, the original cost of investing in the Caring Group incurred from February to June 2020 is approximately 423.2 million ringgit. It expects 251.2 million in pro forma gains from the disposal. Of the 675 million proceeds, 62% will be utilised for growing its 7 cafe store expansions, followed by repayment of borrowings of 250 million ringgit. 7-Eleven says once the proposed disposal is completed, the company would be able to focus its resources to grow its convenience store segment, which is expected to contribute positively to the group's future income. Kumpulan Wang Persaraan diperbadankan recorded total unaudited gross investment income of 3.8 billion in the 7-month period ended July 2023, said KWAP Chief Investment Officer Hasman Hilmi Salahuddin. Gross fund size of the Civil Servant Retirement Fund stood at 184.5 billion as at end July, Hasman said during the launching of a new fund called Dana Perintis on Thursday. The fund's last annual report was for the financial year ended December 2020. In that year, it recorded a gross investment income of 6.81 billion, up 12.2% from 6.07 billion in 2019, with a fund size of 153.82 billion, up 4.3% from 147.48 billion ringgit. The return on investment in 2020 was 4.4%, which is a marginal improvement compared with 4.39% in 2019. Hasman said that as a long-term institutional investor, KWAP has consistently outperformed the long-term return target of 5 to 6% over a 10-year rolling basis. Dana Perintis will see KWAP allocate up to 500 million and focus on investments into venture capital funds and startups in Malaysia. The fund aims to invest up to 250 million each into selected Malaysia-focused VC funds and direct investments into startups over the course of the next 18 to 24 months. Hasman elaborates that Dana Perintis does not mark the first time KWAP is investing in startups. In fact, KWAP has invested in 10 regional VC funds and 3 direct investments, which include the world #1 drone services provider Aerodyne. Hasman said KWAP is slated to announce the first batch of investments under Dana Perintis in the 4th quarter, and is estimated that 5 to 10 VC funds will be selected, and each of them will involve an investment of about 15 million and 25 million ringgit. Turkey has agreed that Malaysia Airports Holdings will continue to operate the Istanbul Sabiha Gokcen International Airport, according to a Bernama report. During their bilateral meeting on Thursday, Turkish President Recep Tayyip Erdogan conveyed the agreement to PM Datuk Sri Anwar Ibrahim. According to Anwar, the Turkish side are satisfied with the success of the company in the first stage, and as such they want to extend operations, which includes building a longer runway. Anwar, who was in New York to attend the 78th UN General Assembly, said Turkey strongly believes that MAHB is best suited and capable of running the ISG operations. Although the agreement to continue operations by MAHB has been announced, Anwar said it will go through the normal process under the relevant ministries. Fully owned by MAHB, the airport is the 6th busiest gateway in Europe, with passenger numbers reaching 25 million in 2021, which was 70% of pre-pandemic levels. During the meeting, Anwar said they also discussed efforts to increase bilateral cooperation in terms of investment and trade. Malaysia is Turkey's largest trading partner in ASEAN, with a trade volume of $4.7 billion in 2022, a 35% growth from 2021. Eco World Development Group's net profit for the third quarter climbed 43% year-on-year to 66.34 million, driven by improved site progress activities and product pricing, as well as cost savings upon the finalization of certain completed projects in phases. Quarterly revenue grew by 7.41% year-on-year to 476.85 million from 444 million previously, mainly driven by the improved site progress activities. Eco World declared a second interim dividend of 2 cents per share. On prospects, Eco World said it is on track to achieve its FY 2023 full-year sales target of 3.5 billion after the group recorded 3.06 billion sales in 10 months, or 87.4% of its target. President and CEO Datuk Chang Kim Wah says that its eco-business parks in Iskandar, Malaysia continue to power ahead, with sales of nearly 1 billion achieved in 10 months, representing 132.4% of FY 2022 full-year sales and making up close to one-third of the group's total sales to date in FY 2023. He believes that the strong momentum will continue based on the sustained interest it has been receiving from both local and international industrialists. Malaysia is expected to face continued challenges to policy making despite the conclusion of recent state elections for 6 of the country's 13 states, as the unity government comprises parties with diverse ideologies, which could slow reform momentum, according to BMI Country Risk and Industry Research, a unit of Fitch Solutions Group. Challenges also arise from the increased influence of opposition Perikatan Nasional, BMI said in a report. BMI said that although the composition of state legislatures does not directly affect the national legislature, the state elections were a bellwether of the electorate's political mood. Nonetheless, BMI expects Malaysia's improved inflationary backdrop and resilient labour market to help keep the nation's social stability risks low. The research house maintained Malaysia's short-term political risk index score at 71.1 out of 100, lower than Asia's regional average GDP weighted of 77.3. BMI said that in light of the weaker than expected performance of Pakatan Harapan, it believes that the unity government will be inclined to roll out race-based policies that favour the Bumiputras to shore up support among this core group. However, this would be a backtrack from its commitment to implement needs-based policies as opposed to race-based. Second, that while it could prove popular with some bases, it could stoke tensions with other members of the coalition. BMI also noted there are nascent signs that the unity government could face gridlocks over policy in the future, citing more MP Syed Saddiq Syed Abdul Rahman's withdrawal for support for the unity government following the public prosecutor's decision to temporarily drop corruption charges against Deputy PM Datuk Sri Dr. Ahmad Zahid Hamidi. Although Syed Saddiq's withdrawal of support does not threaten PM Datuk Sri Anwar Ibrahim's position as the country's leader, BMI believes that such developments could raise doubt about the PH chairman's commitment to fighting corruption.